Hey, welcome back. Now the VIX, which is our volatility index, which measures fear in the market, is at a very key juncture, which is also a great way for me to show you how to trade VIX volatility breakouts. So before we dive into the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, let's look at the daily chart of the VIX and outline a couple things here, all right? So you can see we have each candle representing 1 day of price action, and we have my RSI power zones down below. Now, what you can see here is that essentially since December of 2021, we have been in sort of a mixed situation of moves. We don't have a clear trend, right? Higher highs and higher lows, or lower highs and lower lows. So this whole mixed bag has coincided with moves in the broad market, namely the S&P 500, specifically my baby, the E-mini S&P, that have been tradable, but kind of have us veering one way or the other. And right now the market's at a key juncture. I'm going to zoom in and show you why. So if you check out my video called How to Analyze the VIX Using a Top-Down Approach, that's the exact name of the video as of this moment, you will see that it details the analysis that brought us to this point, okay? Why I'm using the falling blue trend line, why I'm using the rising pink trend line, and so on. Now, since then, the VIX has actually moved lower, coinciding with the broad market moving higher, okay? They move opposite each other. And right now, it's doing something that's like one of my favorite things, all right? So listen close. Not only is it hinting at a directional breakout, or I should say breakdown, by moving below this key price low, but also it is creating a situation of contracting price action. So a contraction in price means that you have a day or hour or whatever interval you're using, and the next one is even smaller, and the next one's even smaller. All right? It's like a slinky, okay? That's a toy I was played with as a kid growing up. And the slinky was this coil that you essentially like kicked all over your house, especially down the stairs. It was really fun to observe. And what it would do is get really tight and wound together, and then it would explode in one direction or the other. And that's what I see here. So this little narrowing of price that we have between this June 2nd, June 3rd, and currently June 6th bars is a really helpful tool to further navigate the breakout. Because the big picture is to look at which direction we're breaking out from the consolidation. We can see that's tilted downward on the VIX, which might suggest that prices like the S&P 500 and the Dow want to go higher, okay? But we don't have what's called confirmation yet. We don't have the 100% let's go, this is happening signal. That would come on the VIX from one of two things. Either actually closing beyond a key price level. So in this case, closing below this price low here, and sustaining that close with continued weakness beneath it. We haven't had the continued weakness yet, right? Even though we had the close below on June 2nd. But we do have another hint here, which is this contraction in price, and I would want to see a breakdown of the contraction in price. So when there's a breakdown in the VIX and you're moving below a price low, and then you get a contraction like this, I want to see a breakdown of that contraction. That would really tell me that the VIX is likely to continue to push lower. And where it would likely end up is as follows. Looking down here at 2132, that would be the next key level on the VIX for it to hold. Again, notice I'm being very careful about using the words support and resistance because really I like to stick to applying those to direct price action, like the S&P 500 or the Dow or whatever else you might be trading where you're considering how the VIX moves. And so these are really important metrics to watch, and you can use this anytime the VIX is consolidating. So again, bringing it back, we are looking at what the bigger picture consolidation was. You have to define that with boundaries, and you can go back to my prior video to fill you in on how I did that. We want to look at a move, in this case below a price low, but if it was a break higher, it would be above a price high. And then on top of that, it's even more helpful to have a contraction or narrowing of price like this, and then watch the boundaries of that. It's kind of like a slinky within a slinky, guys, all right? So looking at these two together, if the VIX continues lower from here, then I think there's a really good chance it heads down to 2132. Now, if the VIX does not break down from the current contraction, this is what I'd watch for. What I'd watch for is a move above 2835, because that would be re-entry back into the consolidation zone, okay? Sort of like hinting you're going to be actually exiting this whole sideways phase, but then not ultimately doing it. All right. This is like being in a traffic jam, guys, and the car ahead of you moves a little bit and you get excited and then you move, but you're just moving in like tiny little steps. It isn't until the car that's in front of you moves and keeps moving and you start to see the space between you and that car widen up that you know that the congestion's over, right? That's what this is. This is congestion. This is a traffic jam on the VIX. And which way it kind of explodes and goes which way or the other, I don't really care. I just want to know which one it is so I can take advantage of it. If it continues lower, again, if the VIX continues lower, I will expect further upside price action on the S&P 500 and other broad markets and stocks. But if the VIX turns higher from here, and especially if it gets above 2835, I will expect to see more downside in the broad markets, more weakness on the S&P. And with the current position of the S&P, relating it back to this breakdown of consolidation and breakdowns and more, that could be a very important move. That could be the beginning of a sizable down move. But don't just take my hint at it here now. Follow what the VIX is showing you. Definitely, when it comes to the S&P 500, follow my analysis in the Skinny on the Markets. That's where I come to the ES futures multiple times a week and I break down the analysis for you. So if you're trading anything related to the S&P 500 or broad market, you got to follow what I'm going to share with you in the Skinny on the Markets. But what's going on here with the VIX is a guide. Awesome. Well, this is definitely going to be helpful to navigate this current breakout. And if you're watching this video farther out in the future, this will help you analyze any further consolidations, breakdowns, and then little mini consolidations like this that may occur on the VIX. And again, it works for the flip side as well. All right, I look forward to hearing more from you. Remember to subscribe, like, follow, and comment down below. Let me know how this video helped you out, and I'll catch you on the inside. You can sign up at the link to get my hot, timely, actionable updates as soon as I publish right to your inbox.